I'm sorry, I hit the record button.
Okay. It really is just a collaboration of all of us. We've all done our thing as far as entrepreneurship or either having some type of side business in addition to working in corporate America. And now we're basically just kind of putting all three of our heads together to really just kind of leverage and elevate other Blacks, especially Black business owners in just our Black community, period. And really just have more of a business mindset to kind of push people to elevate and share knowledge, because a lot of times other ethnicities, they always get together and are always sharing knowledge, but unfortunately a lot of times the Black community, we have knowledge but sometimes it's not shared amongst us, and it really could help us, it benefits us. So I think it's imperative for us to kind of get together and share what we do know so that everybody can have a chance to really kind of elevate or share with their family, and just use it as leverage to kind of better your situation. Okay.
Right. So yeah, so we just came up with this concept because again, like just to piggyback off of off of Tammy, it's really three of us, and again, we are roommates from college, so that's been some years. We're not gonna say how many, but we do believe that when we talk about education and wellness, it is not just, oh, what school you went to, what degrees do you have, because you don't really need a degree to do well financially, if you know what to do with your money. So not just that, but also your mind, your body. Tammy is a holistic health person as well, and also soul. How do we connect our spirit and everything with all of these things? And so what do we hear? So we're going to go ahead and move over to the next slide. So I'm going to give myself an introduction, and I'm going to let Tammy introduce herself. I am a multiple string income generator. I love education. Everything I do is about education. People say, oh, you do a lot of stuff. I do, but it's all about educating. So I've been a real estate agent for 15 years. I have a travel business on shackledtravel.com. I'm also a life insurance agent, and I have written books about, I used to be a loan officer a while back too. So I have written, I had an audio book that's online about credit repair. And I used to be a real estate investor. I'm not currently, or I guess I can't, kind of am still, but I don't do it full time like I used to back in the day. I do enjoy teaching. I teach kids from the ages of, I would say 13 or 12, depending on what time they hit my ninth grade class. Some of them are really smart, on up until the age of 18 as a high school teacher. And I teach engineering and technology, which is a career technical agriculture education course that we have. It's like a pre-engineering course that we have in the public schools now. So I just enjoy mentoring young people as well as people my age, trying to get them to take the shackles off their mind and learn something new, through whether it be through real estate, travel, credit, whatever it is. I'm there for them. Okay, Tammy?
Hey Juan, I just saw you logged in too. Juan is like a childhood friend. Hey Juan.
Hi, Juan.
Oh, I see his face up there. Okay, well maybe he'll tune in. But yes, I'm Tammy Page, and I'm actually currently a tax accountant with my own small accounting firm here in Decatur. I've had a physical office for about 12 years, but I did work in corporate America for 7 years. Like I said, when me, Shanika, and Erica were all roommates in college, when we left, everybody went into their own fields, and I did work in corporate America for a while in the accounting industry for a home builder. And so I basically just kind of gained my knowledge, kind of starting from the very low ends of really AP, like accounts payable, accounts receivable, moving my way up to junior accountant, senior accountant, accounting manager, and so on. So from there, my background has always been in finance and accounting. And so really, I really just have taken my knowledge and really tried to incorporate that as a serial entrepreneur. Both of my parents are entrepreneurs. My mom has a holistic therapist business, and she does nutrition and holistic living. And then my father had a small trucking company when I was growing up. So for me, my background, I always saw two strong entrepreneurs kind of stepping out and doing their own thing. And so that eventually kind of gave me the push that I needed to kind of step out on faith too, and really opened up my own business in the accounting and finance background. So I try to really educate my clients, even to this day, really just how can they benefit from a tax perspective when we're talking about credit. What are different tax tips they can do to decrease their liabilities and maximize their income. I also help a lot of clients set up their small business. I work with a lot of small business owners, really kind of educating them on the differences between different type of corporations to set up. What's the benefit of, like, say, an S corp versus a LLC? And so my perspective is going to be from the finance and accounting perspective, more of the tax perspective. As far as Shanika is a licensed agent, so hers is going to be more so like real estate and different aspects, which I think is great because we're able to bring all of our strengths together and really kind of help people, educate them on things that they probably didn't know. I know a lot of my tax clients come to me and they like the fact that I'm able to break things down simplistically, tell you how you can benefit yourself in certain ways, or how you need to file different businesses you can write off, how to itemize your deductions, just a plethora of knowledge that I think benefits the Black community that they need to take advantage of. So my perspective is always going to be from that. So when we get together in a webinar, my perspective will be more so from a tax perspective.
Okay, and then so with that,
go ahead, Shanika.
With that in mind, we're going ahead and advance to the next slide. And we're going to get into what is credit. So I'm going to, again, it's going to be back and forth how we're going to operate. And I'm going to talk about the credit side, and Tammy's going to talk about, how that connects with taxes, if that's applicable. So we all know that credit is your ability of a consumer, of being a consumer to obtain goods or services before payment based on the trust that payment will be made in the future. So basically, it's generally defined as an agreement between a lender and a borrower. Credit also refers to an individual's business credit worthiness or credit history. So let me talk about this real quick, because some of us come from the school of don't get any credit. I know that's the school I came from. And just like being any other teenager, or most teenagers, I'll say 80%, who's going to do opposite of what their parents tell them, I was that person. So when I went to Georgia Southern, I was 17 years old. The first thing I did was, one of the first things I did when I walked out of the Union and walked into the Rotunda, there was a Discover there. And Discover, oh, you can get $1,000 credit card, $1,000 limit. Let me run your credit so to see. And I said, okay, I'm signing the application. Next thing you know, I get something in the mail telling me, oh, you have $1,000 limit. In 1994, August of 1994, I thought I was rich. I did. When I got that $1,000 from Discover, but I didn't know anything about credit. I remember my mom saying, Nika, don't get credit cards. Mm-hmm. Tammy?
Yeah, my mom said the same thing. And I think it was kind of frowned upon. Our parents really never educated us, really, at least in my home, even though they were successful in their own right. They never really talked to me a lot about credit. My mom just basically said, don't get a whole bunch of credit cards, only get one card and use that just for emergency only. She would, and my dad was like, cash rules everything around me. So, I didn't really know a lot about credit, even at a young age and stuff. It wasn't until, as we started getting older and wiser, where we were like, man, now, wait a minute, credit is important. We really have to, utilize it in order to be successful. So, yeah, I think all of us, or at least from our two perspectives, we didn't really have a good knowledge of it coming in.
Exactly. So that leads us to our next slide. Why do you need credit? So I'm not going to read everything verbatim because Lord knows I can write a whole book about this. Yes. So I can see why if people will tell you not to get credit, because if you don't have self-discipline with your finances, you probably don't. And I'm just going to tell my own, go back into that story. So I get the credit card, and I have at that time, I always worked. So I always had a job. So I think I was working at Georgia Southern part-time. Eventually I had to have 2 and 3 jobs, little part-time jobs. But at one point, I guess maybe my sophomore or junior year, I don't know, I just got into a money crunch. and I couldn't pay the little $20 a month. I couldn't pay the little $20 a month reoccurring fee that it was for whatever reason, or I didn't know the value of paying it. So I didn't realize like that was hurting me. I didn't understand the logic behind it. We didn't have YouTube. I'm sure some of you were born I was born in the 70s. You know, internet didn't really start becoming really popular to the late 90s when we were in college. So I didn't really understand it. All I remember is my mom saying, Nika, don't get any credit cards. But credit is very important because basically even to go to college, if you think about it, a lot of times people don't even have money to go to college. I mean, my mom she didn't save money for me to go to college, right? So she was a teacher, but she had 3 other kids. She had 4 kids total. So she didn't have money saved up in a trust fund or, IRA. We didn't come from that, where we knew about that type of stuff. So she didn't have that money to give me to have a good start. I had Hope scholarship. So my tuition was paid for, but I still had to pay for room and board. So I had to get a student loan in order to pay for room and board. And because I was such a good student in high school, and I had the Hope scholarship, the U.S. government gave me a loan because they were banking on my ability to be able to repay them, knowing, okay, she has a good track record. She's a good student. So they gave me credit. The student loan is your first, if you think about it, it's your first entry into credit. And with that, you're able to get extra money to buy get the rent, the apartment, or the room and board, your food, just little things that you need for just living. Of course, now it's not just that. You got to have good credit to get an apartment, which we technically had our credit checked when we got apartments. We didn't know it. Now we do. All of these things we had to get. So educating yourself on what does that mean is so important. I didn't understand it really until after I graduated in 1998. I didn't understand what Equifax was, what TransUnion was, what Experian was, which are the 3 main credit bureaus that really kind of regulate who's going to get what their credit rating is, et cetera, et cetera. So I didn't really understand how I was kind of hurting myself by letting that bill get, behind, get 30 days behind, get 60 days behind, get 90 days behind. And after you hit 128 days behind, you're going into collections. And then you pull your credit report trying to get an apartment, wondering why you can't get it.
Mm-hmm.
Tammy?
Yep, I totally agree. And like I said, even when we were putting these slides together, and I was putting the pertinent information in, I think a lot of times it's really just educating ourselves about like these bureaus. What is Equifax? My perspective a lot of times is I tell my clients that not to be actual scared. Sometimes people are so scared of Uncle Sam and these bureaus, but to be honest, Equifax, TransUnion, and Experian are nothing but corporations. They have been assigned to regulate your credit by the federal government. And so in odd, that means that it's a lot of loopholes that you can do when you have things that come up on your credit, whether it's disputing certain items, whether it's really just having that knowledge of what can they actually report on my credit about me or in reference to me, or these open trade lines, my revolving credit lines. So a lot of times when I'm talking to clients or I'm trying to educate, it's more so just getting the average person to remember, hey, this is still a corporation, and it is important to maintain your credit, but know your rights, know what different things can be reported, know how to maintain your credit, know how to leverage it, know how to do certain things. Because a lot of times when people are coming to me, it's usually, like I said, in some kind of aspect, the tax aspect, but I get a lot of my clients that come after the fact and say, well, Tammy, can you help me get an apartment? Can you help me get a house? It's all tied together. And so a lot of times it's really just like Shanika said, just really having that knowledge of what to do. How can they report certain things to me? What is a revolving line of credit versus an installment line of credit? What is an auto? So it's really just having that knowledge of what is this personal credit rating and how does it work and how can it benefit me? Because a lot of times I teach people there are legal loopholes to everything. And I think, and it's a difference, that legal loopholes, not illegal. So I think a lot of times a lot of other ethnicities, they take advantage of the legal loopholes. It's legal loopholes to every system out there. So my perspective is kind of showing people how to dive into actually utilizing those loopholes to your benefit. So.
Exactly. So, and also, if you think about it from this perspective, a friend, when you meet a friend, you don't automatically just trust them. You have to build that trust. And so there are going to be things about that friend that attract you to them, whether it's you all both like to play soccer. We both like to go to movies. We come from the same area. We went to the same school. We have the same interests, whatever the case may be. You have to sell yourself on why that person should be your friend. And so it's the same thing with credit. It's so much easier to get things with credit than it is to save the money. Think about it. If in the 1990s, I want to say minimum wage was like $5.15 an hour when I first went to college.
$5.25.
$5.25. Okay, so how long would it take you to save to get a house at that rate? Even if you were going up 3% a year, if you were just, even then, I think if you bought a house, you could buy a decent house for $100,000 back then. Maybe 80. You might get lucky and look up on 80,000, but it's still gonna take a long time as opposed to having good credit. So that's gonna lead us to the next slide. So what makes up your credit score? So there again, Experian, Equifax, and TransUnion are the major bureaus, and they all really have their own formula. But the gist of it is that if you have, like a circle, we always look at things as cyclical, right? Or a pie chart or whatever. When you look at that, well, what's the biggest weight? The biggest weight is that 35% weight that we see here. Payment history. On-time payments or delinquencies. On-time payments, of course, are pros. Cons will be delinquencies. Going past 30 days late. You can go up to 29, but I'm going to tell you, don't do that. I'm going to talk about that a little bit more after I'm finished. Tammy does her piece. But being delinquent, that's going to drop your score. It could, within that month, 35%, just making having a 30-day late. You want to always have excellent payment history. So try to pay it before it's due. On the bill date, and not the due date. There's a difference. When you look at your statement, it says this is the cycle from the 1st to the 30th. You pay it on the 30th. The due date may say it's due on the 15th. Well, technically, it's not late until you pay it after the 15th. But you always want to pay it on the day the bill cycle ends or just a day or two before. Why? I'm going to tell you in a second. All right, the next thing is a length of credit. How long you've had your credit is 15%. So if you started off at 16, which you can, or let's say 18, because you may not have anybody who could do that for you. 18 years old. You start off at 18 years old and you're 28, you have a 10-year history, as opposed to somebody who's 25, 30, 40, just getting credit. Okay. So your length of history is 15% of your score. The other percent, a mix of credit. They want to see not only, they want to see revolving accounts, which would be your Visa, your MasterCard, your American Express, your Discover, etc. Maybe some store cards. Okay. That's 10%. That's revolving, but you also have installment loans, which will be your car notes, or maybe you got a loan for a refrigerator, whatever the case may be, from a finance company, which I wouldn't recommend you do too many finance companies because it doesn't look good. Or mortgage. Okay. So that's going to be that's going to be 10%. And then your accumulation of debt. Now they look at your ratios. So 10%, accumulation debt. So how many credit inquiries have you had in the last 12 to 18 months? And when were those accounts open? So like, for example, you don't really want to have more than 2 inquiries per year. Okay. Now that's hard to do if you're buying a house or a car, but if you do it, let's say you go to 30 different loan officers for a house, just trying to shop your rates. They're only going to count that one time in a 30-day period. Okay, so you can, not selling, you should be getting 30 people to pull your credit, but it's not counted 30 times, as opposed to One month I apply for Visa, the next month I apply for American Express, the next month I'm Discover. You know, that's going to give you a good hit each time. And it's going to, if you have like 7 or more, it's going to take that ratio down, that mix down at 10%. So let's say let's say you had a 700 credit score. Well, if it's going to be at the lower end, it's going to take 9% down. So let's say 700, 10% is 70. So let's say we're going to take off, take off about 63 points, of your score. So it's going to take you down to 600 and something because you were, shopping for too much credit. It makes you look desperate. Okay. And then capacity, that's their percentage of credit limits available. I like to do things in whole numbers. Let's say you have $10,000 credit limit across 3 cards. You should not be using more than 30% of that balance. Now you might say, well, what's the point of me having 10,000? Well, you can have it if you're going to pay it by the bill date. It doesn't matter because when you pay it by the bill date, it doesn't show up on your credit report. A lot of people don't know that. When you pay it on or before the bill date, not the due date, it does not show up on your credit report. So I can have $10,000 of credit and run my credit up $10,000, but as long as I pay it before that bill cycle ends, it does not show up on my credit report. Experian doesn't see it, TransUnion doesn't see it, and Equifax doesn't see it. Tammy?
Yep. I was just going to piggyback on the same thing. Yep. And that's something I actually learned from Shanika. Because like I said, when she gets to credit piggybacking and authorized user, that was something that she taught me. A lot of times when I'm talking about what makes up your credit score, a lot of times I see it from the client's perspective where they're trying to come to me and I'm helping them with their business. So my angle is usually a lot of people who want to start up a business or who have a business and are using themselves as a personal guarantor. Then that's when I'm able to kind of sit down and say, okay, hey, it has to be a balance of revolving, installment, auto, just kind of like how Shanika said, it has to be a mixture of different open lines of credit. And I basically, when I pull tri-mergers for clients, because I do a lot of business credit, I extend a lot of business loans, or even when the PPP program, I helped all the legitimate business owners, not the fake ones, people who were in business already over 2 years, which is a lot of my clientele. That this aspect from my point of view is where we're sitting down, making sure it's a balance of a mixture of open lines of credit, making sure the payment history, they have good payment history. Same thing what Shanika said, really just kind of educating and utilizing like, hey, we need to make sure it's a balance. And even if we're going to use yourself as a personal guarantor initially, and then eventually get that person taken off and totally into their business credit, a lot of times you can use your Dun & Bradstreet number. So my perspective is different, but at the end of the day, it still boils down to everything has to be a balance. I'm a person about balance in life. So just like how Shanika said, I didn't even know that. And it makes sense now because when you do go back and you look at your statements, I know when I look at my credit card statements, when I notice that if you do pay about the bill date, it doesn't show up because when you pay about the due date, it might say, hey, you had $3,622. And then, but if you pay it before, whatever I use, it wasn't showing up. It was showing that lower balance because I had already paid it off. And so, like I said, these are good tricks or just legal loopholes that people have to take advantage of. I didn't really know that until me and Shanika started doing more business and talking and doing different things. And like I said, when you have different perspectives, you're able to gain so much more knowledge. And so I think from my perspective, it's more so business credit or helping clients that are coming to me from a different angle, but it's all relevant. So, yeah.
Right. So a lot of people, when they come, work backwards, I say, because like if you want to, let's say you want to get a certain loan and that loan requires you to have a 700 credit score, you have to work backwards. Now, the good thing I love, and this is, I don't do this for people anymore directly. I do consultations to tell people how to do it, but I don't do it for them because I believe in teaching people to fish and giving them the fish. Okay, that's what I do. So let's say you needed to repair your own credit. Okay. Let's say you come and you have a 600 credit score. You can buy a house with as low as a 580 credit score if you do FHA, but it's going to be difficult. and your interest rate is going to be lower than even if you had a 700, 850. 850 is going to be like the the big, I haven't seen anybody with higher than 850. Okay, so let's say that's the max. And so let's say 850 is 100%. You got all these check the box. Everything is excellent. But that's what your goal is. But let's say that you don't have it. Let's say you have a 600. Okay, well, something in the T is not right. There's something wrong. So we have to be able to analyze why. It could be that, maybe you, like I said, you had a 670 or you close to a 700, but you had a lot of inquiries, and it was each month you had those inquiries. So that could have dropped you down, let's say 63 points. Okay, so you're closer to that. It could be that you're maxed out on your credit cards, and that's an easy fix. That's an easier fix. And I'm going to tell you why, because we're about to go to this next slide, and I'm really going to explain it. But that's an easy fix. Now, sometimes if you have a lot of installment loans, which is possible if you have student loans, I have 4 degrees. So Lord knows I know. A lot of us, especially teachers, we get a lot of student loans because it's easy for us to get. We get paid by what degree we have. And, how many degrees they pay you according to your degree and also experience. So let's say you have those loans, but let's say you kept putting them in forbearance, which you can do. Well, let's say you borrowed, let's say $100,000, but you kept forbearing for 10 years. Well, you're going to have some accumulated interest on that top of that $100,000. You may have $120,000 that you owe. And that doesn't look good because they only extended you $100,000. But on your credit report, it said 120. So that's going to look negative. That's going to shift your score too. In that capacity range, because that was over your capacity for that installment loan. Okay, so that's something else that a lot of people don't look at. So you need somebody who is going to coach you, and that's what I like to do. I like to coach people and show them how to fish. Of course, that's not free. We will talk about that later, but I will do that if that's something that you need. All right, so let's go ahead and go to the next slide, and we're going to talk about credit piggybacking. Now, this is my favorite thing. This is a game changer. I have friends of mine who are business owners. They are, in the top 5% of income earners. They have used this strategy to help them to buy homes, to build businesses, to just do a lot. A lot of us people, a lot of our people don't know much about this. It's called credit piggybacking, and it's not illegal. It is actually something that people have been doing for years. But again, if your parents did not have good credit or credit at all, you wouldn't know about it. Because when you have credit cards, they ask you, do you want to add an authorized user? Well, do you know that you can add someone as young as 16 years old onto your credit card, and they can, instead of you getting them to use their which we're going to talk about later, their debit card, let's say, because you always want your teenagers to kind of have their own account, as early as possible. But instead of them using their teen account debit card, which sometimes they lose it, you're trying to get them used to using their card, etc., you can add them as an authorized user. Okay, so about 1 in 4 consumers acquire their credit history from an account to which others are responsible. So, for example, I have a lot of credit cards. I'm not going to tell you how many. It's a lot, but they are paid off. Hallelujah. We use them. We do use them. They don't just sit in the drawer. Okay, so there's a strategy behind how we use them. If we got enough time, I'll go through that strategy. But let's just say American Express. Well, on my American Express card, I have authorized users. I have about 3 authorized users, and they are all my family members. Okay, they're all my family members. So they can, I tell my oldest son, who's 19, Roderick used American Express. He's going to, for Labor Day, he's going to Tampa. I said, use American Express. Number one, we're getting points because it's a Delta Sky Miles, American Express. But also, every time your authorized users use it, you also are benefiting as well. But also, your authorized user does never have to use your card. They don't even have to touch it. I have other cards that people have paid me to be an authorized user. It's $200 for 3 months use. And it's going to help their credit because it helps them to build their credit up. And I'm going to tell you why. Well, when you piggyback off of somebody's account, when they report it on the credit report, your whole credit history shows up for that card. So if I've had that American Express card since 2020, 2020, 19, 2017, whatever, how long I've had it, all my payment history shows up on that person's account, like they've had it that long. Why is this good? Now, we just told you on the previous slide that your length of credit matters. So the longer you have credit, the better. Okay. So you want to boost your score up very quickly. And you don't have credit, or you have, let's say you have credit, but most of your cards are maxed out. So let's say one of your credit cards, you have a $500 limit and it's $499. And then another one, you have $1,000 limit and it's $999 that you spent. And then another one, you have, let's say, $400 limit is $400. You're maxed out. So now your credit score has dropped because you're at your capacity where it looks like you're about to hit bankruptcy. Well, if you find somebody like me who has available credit on their accounts, and maybe you work out a deal, get added as an authorized user. And let's say they have an account that has an $8,000 limit or $5,000 limit or whatever the case may be, and it's not much on there. Let's say it's $10 on there, but the limit is $8,000. Your total available credit shifts, and your credit score goes up as soon as they report it. Again, it's reported after they do the bill, after the bill cycle ends. So that's on the bill date. You get it? Tammy, you want to expand?
Yeah, I was just going to say, and hey, Adrina, hey, Alberto. I see some more people coming in. Alberto is my tax client, and of course, Adrina. Hey, Adrina.
Hey.
But yeah, I was going to just tell from my testimony side that authorized user is just like a godsend, because a lot of times people, Adrina saying, hey, Tammy, I think a lot of people, us as Blacks, we don't utilize that. And I know a lot of, I do have white clients who do for their kids a lot. And so when we start thinking about it, like, why weren't we taught that and stuff? So now it's our duty to kind of show our kids or nephews or nieces or just people we know how to utilize that. And I was going to give my personal testimony that my daughter, Shanika and myself, we helped my daughter do that and stuff to give her a jump start in life. And I think it's so important, like I said, just having that knowledge on how to utilize it and put your kids ahead of the game, or yourself ahead of the game, or really just educating your family and friends and stuff in order to actually put them in a position where they can go out and have that boost in life. Like I said, a lot of times we see that our parents really just didn't have that knowledge. But when we gain that knowledge, I feel like it's our duty to position other people around us, whether they are our clients, our friends, our family, our kids, just do better. If you know better, then you have to do better. And so I love the concept of credit piggybacking and using AU accounts and stuff to give yourself a boost, or really kind of give yourself that edge and stuff to just be in a better position.
And that's really what it's about. When we talk about legacies and we talk about building generational wealth, how can you build generational wealth if you don't have some type of leg up, right? So knowledge is power. A lot of us went to school and we got enough knowledge to work for other people. We got just enough knowledge to, okay, yes, you might have went to school to be a computer programmer, but you just know how to do that. You could be making a $200,000 a year as a software developer, but if you know nothing about credit, if you know nothing about taxes, you're just going to be a high paid slave.
And
I know people.
Shanika, not to interrupt you, but we did have a comment in the chat.
Okay.
Adrina did ask, well, how does an authorized user to your account have any negative impact to our good credit? And I think she came in after you had spoke on that, but if you can just kind of go back.
Okay, so if you feel like that person isn't going, like, for example, the people that I give the actual card to, because I will add people to my card. Like for one of my cards, I think I can add like 24 people or something. I can add people to my card, but they're not going to get the credit card, right? It's just they're getting for a temporary time for 3 months. They'll pay me, normally when people do use my credit to piggyback, they'll pay me $200. They'll get access. They'll be on my card for 3 months. And I'm not the only one that does it. It's thousands of people who do this. You can look it up. Just Google trade lines. So you don't give them your card. You just hold that card in like your desk, or in like a safe or whatever. And it's just all they're needing is the report to show up for them to be able to get. For example, if they're 18 and they want to get an apartment, they need to have a credit score unless you're going to sign for them. I highly recommend being a teacher and a parent that every child starts working at 16. The reason why, let me tell you why. I'm a real estate agent. One of the things they ask you for when you buy a house is 2 years of W-2s. Unless you know somebody, let me just say this. You need 2 years of W-2s. Okay, you can show that your income is increasing. It doesn't have to be, let's say you're making, in year 3, you're making $50,000 a year, which is possible. But you still need to show 2 years of W-2s. So if you know that, you'll start working at 16, whether it's at Burger King, McDonald's, et cetera, et cetera. If you know that you're trying to buy a house young, which I recommend, if you can, do it. The reason why is because, number one, I know people who are 18 that own houses. Why? Because their parents put them on their account at 16. I have access to my kids' accounts. So if they buy something, I can see it. As soon as they buy this, okay, I'm pulling out that money for the gas. I prefer them to use the American Express, the Wyndham Visa, or whatever on that, because it's fraud protected, right? It has more protections than a debit card. Debit cards, yeah, they're great, maybe, but it's, your money is gone right away. If I call American Express, they're gonna put my money right back then. I'm gonna have way more protection, right? So that's the beauty of it. And then they're building their credit so much quicker. So if they see an opportunity, which there's going to be some opportunities probably in the next few months, real estate wise, because everything is not like it was last year. And let's say the housing prices get back to normal. They can finally buy a house. My child is 19 years old. He makes good money for 19. Mm-hmm. If he wanted to, he could buy a small townhome or a condo. But if, let's say, it's a friend of mine and I just let them use my card, well, they're not using my credit card. That card is in my drawer, right? But the credit history is showing up every time. Like, for example, if American Express bill date is the 24th, well, after the 24th, it shows up on Equifax, Experian, TransUnion, whoever American Express reports to. So it's not only going to show up for Shanika, it shows up for Tammy, for Roddy, for Emmanuel. You see what I'm saying? It shows up for all of them. So they're able to, get offers in the mail for extra credit, or they're able to go get an apartment or whatever the case may be. I recommend just using somebody, piggybacking off somebody, build your credit up so that you can get those other offers so that you can build your own credit, whether it's you buying a house or a car, or a house is like the ultimate, but the car, or getting another card. Let's say you want a Discover card or whatever. They're going to start sending you offers in the mail based off of what your credit report is showing. I hope to answer your question, Adrena.
Yeah. And I just want to say that, being totally transparent, like I said, me and Shanika, I actually added 2 trade lines, and Shanika added 2 trade lines for my daughter to be totally transparent. And it gave her a 756 credit score, and she's 19. So what we're telling you this information. We're sharing this information with you all to let you know, these are legal things that you can do to position yourself to be better. And this in turn will lead to helping you as far as if you wanted to get a personal credit, of course, you're building your personal credit, but say you want to get that personal loan, you take advantage of having that authorized user account on your account and utilize it while you have it. Then go out and establish your own credit.
Right.
And that's what we should be teaching our kids. Like, hey, you have to utilize this. You have it for 3-4 months. Now go out and get those additional credit cards or just different things that are going to help, because eventually those lines are going to drop off. So like Adrena, if you did it for your son, Tyler, you don't keep it on there forever. You do it to give him a boost. Then it helps him to go ahead and establish his new credit. And now he's in a position where he has that jump start in life to go ahead and secure that apartment.
Alberto, I messed up. Julie called me. Emergencia. I told her that I'm on a. So what is Zoom?
Okay, I think I'm gonna put somebody on mute. Okay. All right, that's fine. But yeah, so yeah, Tammy,
Not
thank
healthy.
you so much for that. But yeah, so that's that. So that leads us to our next slide, which we're gonna talk about leveraging your credit. But just let me look, let this thing come up, it's loading. Tammy, you wanted to expand a little bit more what you were saying?
Yeah. Well, like I said, when we were basically just kind of putting all these slides together, I think the piggybacking more so before is really just showing you how to take advantage of boosting that credit. And like you said, a lot of times, my thing is, like I said in the very beginning, a lot of times people are kind of coming in after the fact because, oh, there go Mr. Bowman. Hey,
Hey,
Fabian.
Mr. Bowman, I saw him. Yeah, hey, Fabian.
And so I think it's so important for us as a Black community. I think these are secrets that need to be shared amongst us. Like I said, a lot of us need to share this knowledge amongst our own community, amongst our own friends and family, so we can kind of elevate each other and boost each other to the next level. So I think a lot of times people, we have to look at it from that perspective of really like, hey, we have to be pushing each other to be better and be in a better position. I know a lot of you all are my tax clients. I see Miss Diane, that's Miss Diana right there. Her and Alberto are my tax clients. So hey, I see she waving. So I think this is so important of us getting together, number one, as a Black community. And really just sharing this information because, like, I saw Juan chime into the chat. I saw Adrina chime into the chat. A lot of us really need to utilize what we know, and we can start our own little thing. Like you said, Shanika has the means in order to do this. Not for 200, she's gonna charge a little bit more than that though. But we have to stick together, but it's so important for us to gather together because when you all have a good concept of this knowledge, then you at least now you have that tool to go back to say, hey, let me reach out to Shanika, let me reach out to Tammy and see how can I get an authorized user? How can I position myself to be in a better position this time from 3 months later or this time next year? You know what I mean? I think it's so imperative that we share this knowledge and just kind of keep going and elevate ourselves to be in better positions for business wise. Me as an entrepreneur, I think it's very, very important in just positioning yourself, whether you're in corporate America, whether you got a side hustle, whether you're an entrepreneur, this can benefit you. You know, you need to have this where whether you want to access your business credit or improve all kind of different aspects of your life. So that's what I
So that leads us to leveraging credit. So why would you need to do this? So like I said, when I was 17, and I love my mom. My mom has great credit, great credit, and she's way more conservative than I am. I think I kind of piggyback from my dad's side, the Ragland side. I never used that last name, but that is supposed to be my last name. Married now, but still. Anyway, I never used that. I think I'm more aggressive when it comes to certain things and when it comes to business. So again, I am a W-2 employee. I do work for the state, for the county as a teacher. However, I've been an entrepreneur longer than I've been teaching in public school. And I am, like I said before at the beginning, have a travel business. I've been a real estate agent longer than I've been teaching. And I'm also a life insurance agent. So I'm talking a life, health, and sickness life insurance agent with Horace Mann. So you're like, okay, how'd she do all these things? Well, it's leverage. I don't always do things directly. I might do things through other people. And because I am a real estate agent, I can send it to somebody else and I'll still get a percentage like this. So you're going to give me 20% or whatever that commission was. So there's ways to leverage licenses that you have. There's ways to leverage credit. So starting business is a perfect way, not only from a credit perspective, but also from a tax perspective. And I'm going to talk about the credit side and Tammy's going to talk about the tax side, and we'll just balance back and forth because this is so important. Number one, you're in business as long as you have an intent to make a profit. Now, I'm not a tax accountant. Tammy is though. Okay. You have an intent to make a profit. So, for example, I tell my teacher friends this all the time. I said, why don't you have a consulting business or a coaching business? You're a teacher. Like that's the most logical thing to do. Like I have a curriculum business on Teachers Pay Teachers. I sell under Unshackled Learning. I have 195 products that I sold. Where did these products come from? I created them because I saw a need for certain things when I was teaching that we did not have. So I said, well, let me make it. And instead of me being a secret agent and holding it, I sell it online. Okay. And I get passive income. I make money in my sleep. Okay. As far as how did I get into the travel business? Well, I was a real estate agent. And when you know anything about taxes, with Tammy will talk about Schedule C's. But on my Schedule C, I'm gonna be real with you. I got audited because it was like, well, how are you a real estate agent? You got $7,000 in travel. Good question. Okay, well, I got audited. I had to pay a little bit on that, but I started a travel business that same year. So Unshackled Travel came into play. And I sell travel. I sell travel to people who, I have my own website for that and everything of that case. And I do travels, and I do have to travel to see the different resorts and hotels so that I can, tell my clients about it. So now it is justifiable, right? Real estate, like I said, there's so much stuff you can do. It's not just selling. I can, people want to rent a house that's on the MLS. I can make money from that. I can make money from consulting fees. If I wanted if I needed to buy something, let's say I needed to do like a seminar, we grew out of the webinar, we got more than 100 people. Let's say we wanted to get the Marriott or some event, space downtown. Well, instead of going into my account, I can just use my credit. I know I'm gonna make the money back within that 15 to 30 day period. So I'll just put it on my credit card and just get paid on the back end. That's the beauty of leveraging that credit. Also, remember I told you, I had American Express and Wyndham Visa and Marriott Bonvoy. Just for signing up, they give you bonuses, they give you Sky Miles, and that's how you travel for free. So if I don't want to pay for that flight and I go out of town, let's say I want to go to Singapore, well, I'm going to figure out how many Sky Miles I need to go to Singapore, and I'm going to buy stuff on my credit that I normally would pay for out of my debit account anyway, such as my electric bill, my cell phone bill, et cetera, et cetera. I was paying for it anyway. Instead of having it come out of Wells Fargo, then it's going to come out of Marriott Bonvoy, American Express, et cetera, et cetera. Why? Because I'm leveraging my credit card so I can get my points and my miles. So you don't get to do all these things. Yes, there are some debit cards that give you points. I know Wells Fargo is trying, but it's nothing like that Marriott Bonvoy. It's nothing like that Capital One Venture. It's nothing like that Wyndham Visa when I'm getting these free nights. And I'm like, hey, y'all. And I'm not coming out my pocket. Also, when we talk about buying assets, I think I sent this to you, Tammy. I'm not sure. They have a event out in Conyers for consignment. It's like a big consignment fair. You can sell stuff there. I got tons of clothes that I don't use. I got tons of things I don't use. Hey, let me get this little $18 put in my credit card, but it could be more than that. Let's say it's $1,800. Let's say I want to go to Essence Festival, but I want to be a vendor because I want to write this off. It's a business thing. I'm gonna buy a booth. Maybe I want to advertise Unshackled Travel, but I know because I'm gonna see all this foot traffic, that $1,800 that's sitting on my credit card is gonna be paid off pretty soon.
Yes, yeah.
You see what I'm saying? So that's the beauty. That's the beauty that I'm not going to use my cash. No, I need my cash in my bank because money attracts money. The more money you have in your bank account, the more money you're going to attract. So why would I use my cash when I have credit and I can get my points and my miles? What makes the most sense? So I'm going to increase my financing options because I have good credit. I'm going to get the lowest interest rates. And I'm gonna pay less for whatever I'm gonna get than you are. Somebody I'm selling, they want to go to Singapore with me. That's gonna cost them about $3,000. Oh, I have Sky Miles and I have points on Marriott Bonvoy. Mine is free. See, the thing people don't realize about people who have money, especially people who are entertainers. Entertainers get a lot of stuff for free. Why? Because they have a big following. They have a big following on Instagram and Twitter and Facebook. So people give them stuff for free just so they can come, so they can get more people to come. So they don't have to spend their money on that type of stuff. Everybody has to start branding themselves. Studying. People got mad at Trump, but they don't understand how he works. Trump, the reason why he doesn't pay a lot of taxes is because he leverages a lot of his stuff. You don't pay money on borrowed money. You don't pay taxes on borrowed money. Tammy?
Yep. Well, you hit the nail on the head. Like I said, me coming in talking about leveraging credit, it definitely is going to be from a business perspective. When I think of leveraging credit, I'm thinking of now you need to position yourself with that credit that you're talking about, how you utilize it. Now you're able to have this small business line of credit or a
I have
business.
mass right here. Yes, sir.
Uh-oh.
They're saying it's gonna probably be 6 o'clock before they can get the power back
Let me
on.
change.
You gotta mute them, Shanika.
Let me see who that is. Hold on, let me mute Samsung. Okay, go ahead.
Okay, so yes, from my perspective, the leveraging credit comes in. Now, I want you to think about using your business credit and not using any of your personal credit. So when I think about leveraging credit, I'm thinking about, yes, now you're setting yourself up where it's not going to personally affect you. Now you have your business line of credit or your business credit card that I want you to track all your deductions on. I want you to go out and use that business credit card to buy different things for your business, your personal. You can buy for whatever means you need to, but now you have itemized deductions that you can write off that will lower your tax liability and drop you down to a lower tax bracket, in turn increasing your asset side or your refund side. And so now you're putting yourself in a position where, hey, I'm not taking the hit on all the personal side. Now you have that credit, whether it's through the business loan. Like I said, even when we did the PPP loans, I did a lot of economic injury disaster loans. People, you're able to put yourself in a position where, hey, now I have access to extra reserves that I can use for whatever means I need necessary. But these are tax write-offs. So now you're going to put yourself in a position where, hey, you can go out, like Shanika said, you can go out and take these trips and do different things because you can legally write these off as tax deductions. So you really, and a lot of times people don't realize you can put property in your business name. You can put vehicles in your business name. You can put utilities in your business name. You can put all kind of things that will basically maximize, like give you the benefit of a lot of things you can do, and it doesn't personally hit you. Just like a lot of times people don't understand when you're leveraging your credit too. Like I have a lot of clients who I basically transfer over out of their personal credit and transfer their properties into their company's name, because what happens is you can simply just dissolve that company if something goes wrong. Remember when the housing market went under? A lot of people had to file bankruptcy. A lot of these properties got foreclosed on. A lot of times people don't realize that would have not affected them personally if those properties would have been listed in their business names. Only thing they would have had to simply do is just dissolve the company, and it wouldn't have taken a personal hit on their credit. So a lot of this, like when she said, we're talking about leveraging your credit, there's so many different ways you can actually leverage your credit. And like I said, from my perspective, it's more so on the business side. I like to see a lot of people, because I know I've been in a position where I've been able to get like business vehicles and just different things under my business name. So establishing that credit on a business level is even better. Like she said, she's able to utilize like her credit cards and different things and take trips and stuff, but it's so much more you can even do from a business side as well.
Exactly. And even with giving those points, the miles, you can get those with business cards as well. And like you said, if your credit score is high enough, get into those business loans. You can get higher limits. Why is that important? Do you realize that there's some people purchasing houses, they say with cash, but not really using cash, they're using their lines of credit. Mm-hmm. Now, I wouldn't recommend you buy a house and the interest rate is 29%. You can refinance that, but why would that make sense? Well, I used to flip houses back in the day, or try to. They end up being rentals that I had to use. I had to rent them out. But if they have all these wonderful shows, flip this house and do this and all these cute stuff. How are these people doing it? They have lines of credit. They're just not using their cash. They're getting lines of credit and building. When you get, and they still do this, I used to get it's called hard money loans. Mm-hmm. In order to get a hard money loan back in the day, you had to have $5,000. You bring $5,000 to the table. You got to find a house that has a after repair value that is not more, that is higher than the 70%. So let's say you get it for 50% of what it would be. that 20% has to be what you're going to spend on renovating the house, etc. But before they release the funds to for your first draw, for you to, let's say, do some remodeling, etc. on it, you got to have some money sitting around to get the materials and to pay the contractors, and then they come and check everything, and then they give you your draw. So having credit will help you to be able to flip a house and make $50,000 in a month or something like that. And that's actually, definitely possible. I mean, I know people who do that. I know people who buy houses with cash. But a lot of times it's not cash. It's usually a home equity line of credit that they're using. Sometimes they're leveraging business credit. It's just a lot of different things that you can do. That's just really going to help you. But like I said, when you know better, you do better. A lot of people, what they did last 2 years during the pandemic, the 2020, 2021, if you looked at the real estate market, especially in Georgia and Atlanta Metro, about a third of the home sales were cash buyers. How were these people having all this cash? Well, they had pulled money out of their house. So let's say they stayed in, I'm just giving an example, let's say California and LA. Well, let's say they had, because the housing prices was going up so much, they had equity. Well, equity runs the world, especially in America, rather. And so let's say they pulled out, $300,000 of equity. Maybe their house was, they only owed $300,000 and their house is worth $700,000. So they pulled out $300,000. It's nothing for them to buy a house. Here you go. Cash, so they can beat us to the punch, when you have access to this. But if you start early, because if you bought a house, especially when you took advantage of those rates in between 2008 and 2012, when the houses were really low, when the market crashed. If I know people who purchased a house, this one house that off of Rockbridge, forgot the name of the subdivision, but it was off of Rockbridge in Atlanta. And I remember when they built those houses, it had to be early 2000s. And the model home at that time was going for close to $225. This was like maybe 2000, 2001, maybe 2002. That house, I went back in that house probably in 2008 or 2009. The price had dropped down because the market went down. The price for that house dropped down to like $75,000 or $80,000. But the problem is, a lot of people who were investing at that time prior to that, they couldn't get anything because their credit was jacked up. So the people who could get stuff, whether they were, I knew somebody who was a parapro who could buy that house. He didn't buy that particular house, but just giving an example, for less than $100,000. Now those same houses are going for $350,000, almost $400,000. That's the type of beauty. Yes, the market might go down for a second. All markets go up and down. If you can leverage your credit, you can use your money. If you want to take some of your money, if you wanted to put it back in the stock market, because Amazon stock is split. I'm not a stock, like I said, I'm not a stockbroker, but Amazon in 2020, their stock was like $3,000, $3,800, something crazy. Then they split their stock. So if you look it up now, I think it's $100 and some odd dollars. Well, it's going to go back up eventually. Yeah, 104. It's going to go back up eventually. They just split their stock because they knew the economy was going down and recession was, the interest rates were going up and stuff like that. But you have to be able to look at these markets and understand. If you have credit, it's king. To me, it's better than cash. Yes, build your cash reserves up. I believe everybody needs to have 6 to 12 months of living expenses saved up liquid, right? But I'm not going to be using my liquid money for my emergency money. I'm going to be using my credit first. Okay. Tammy, do you have anything else for this one?
The other business partner of Atlanta Educational Wellness Center is also in here as well. Erica's here. Remember in the beginning, we explained to you that it was 3 of us. Erica is the third party to our company, and she has great knowledge as well. Hey, Erica, say hey. I see her. There she goes. It's kind of okay. But like I said, I just want to reiterate, I think the whole purpose of us extending these invitations and wanting to get the Black community out and really just share this with our friends and families, our kids and just members and stuff, is really just to help everybody. Like I said, I think us as a Black community should come together more and really share these legal loopholes or share these these pieces of knowledge and stuff with each other so we can know how to do better and just position ourselves in a better position and be able to utilize business credit, our personal credit, know how to decrease our tax liabilities, know how to have, why should we start this side business, which is one of the aspects we'll talk about. Shanika's still going to talk more about different aspects of credit cards versus debit cards. But when we get to that business, it all ties to the next slide. When we talk about the side hustles, what are the benefits of having these side businesses? Like I said, a lot of you all are my tax clients, from Mr. Bowman, Alberto, his mom, Audrina is not, Shanika and her husband aren't tax clients. It's so many different things that we can take advantage of and utilize and stuff, and put ourselves in positions where they really are gonna be beneficial to us. Like I said earlier, we shared our testimony of how the authorized user accounts gave my daughter a credit score of 756. How, piggybacking and leveraging your credit. A lot of times business credit has benefited me tremendously. And we've been able to share that. I've been able to share that with like Erica, Shanika, we're able to position ourselves where we can have bigger lines of credit and utilize that, where we don't necessarily always have to tap into our personal credit. So many different things that we can do to help elevate each other. Like I said, share these legal loopholes, share these different pieces of knowledge with each other so we can just be in a better position.
So we're going to talk about why credit cards are better than debit cards. Now, this is an opinion and it's not fact, because everybody's life and lifestyle are different. A lot of these are facts. So I'm saying it's my opinion, right? So credit cards, they're borrowed funds issued by a bank. Now, as you know, when you put your money in the bank is lending your money out. I hope everybody understands that. If you put $1,000 in your account, the bank can leverage that money up to 12 times. Okay? It's called fractional reserve banking. Look it up. So they're lending your money out. That's how people are able to get cars and houses and credit cards. Okay? So other people's money, other people's property. You remember that song, You Down with OPP? That's what we're thinking about. Also reaping travel rewards, points and discounts. I get cashback rebates using Discover card, my Wyndham, my American Express, my Marriott Bonvoy. I get my Capital One Venture. I get travel rewards, and I love to travel. Everybody who knows me knows that. That's why I have a travel business, Unshackled Travel. Helps you to build credit. Keeps your interest rates and fees can vary. I don't really care about interest rate on the credit card too much, because I'm not going to hold that balance. Have I held balances before? Yes, I have. And it doesn't feel good. I pay my stuff off before, or at least I try to keep my utilization under 10%. So let's say if I have $50,000 available to use, I'm not going to spend more. I'm not going to have 5,000 more than. And the only reason why I might float that 5,000 is because I'm not paying interest. Maybe it's a 0% introduction rate. So I'm not in a rush to pay that off. Like a rooms to go. I'm not in a rush to pay it off. Only reason why I would pay that off is because, let's say I'm trying to buy another house and I want my debt to income ratio to look a certain way, because that's when you start playing around with stuff. But otherwise, if I'm not paying interest on it, what does it matter? It can sit there for all I care. Now with credit cards, because you do have, eventually once you get your credit up, you'll have a lot of available. You're like, oh, I could go on that trip. You don't have money or the hustle. Like if you don't have a hustle that when I say hustle, not a negative hustle. I mean, like for example, I know that I have my teacher's money, my W-2 income, but I know I can, let me sell some more stuff on Teachers Pay Teachers. Let me sell some travel. Let me sell a house. Let me at least rent a house so I can get another $500,000, $2,000 so I can do these things. I wouldn't be using that credit. If I didn't know I had some more money coming in, like I could pay it. If I'm using something, I know, okay, I have the money to pay it. I just want to kind of float it around so I can make my money grow or whatever the case. Other things, credit cards offer fraud protection as well as protection against unauthorized purchases. It's way more secure to use. For example, with American Express, not only I get a free check bag, you got to pay for those check bags. Most airlines, I get travel rewards. Of course, I get companion fares. I get to go in the Sky Club. You know, other people don't get to go, get free food in the Sky Club. So it's other little perks that other people don't get. Debit cards, money deducted from your bank account directly, which is the same as your credit. It's going to be automatically deducted. It does help avoid accumulation of debt because you're just using, okay, let me just use this. I know I'm going to track it. There's little to no fees, no interest charges, but it won't help you build credit. It just, debit from your account, right? Sometimes you have to show, especially if you're trying to get a house, you got to show like an average daily balance, especially if you're like a W-2 income employee. And Tammy, you can expand on that. If you're not W-2, I'm sorry, if you're 1099 or you're self-employed, you got to show bank statements when you're trying to get a loan. And they look at your average balance. So if you understand, oh, I can pay, kind of float these credit cards and make sure I pay them by the bill date to where it won't mess up your debt to income ratio or your utilization. Well, you can, try to leave a little bit more in that account, for a while to show the average daily balance. So there's a lot of, math and balancing that's involved with that. Tammy?
Yeah, no, I totally agree. You were talking, let me go back to the slide because I was looking at another slide.
Okay.
Yeah, but as far as the tax aspect, hold on guys, I'm sorry. I had got up and kind of went in the kitchen. Yeah, but no, Shanika has hit the nail on the head. What she's saying is a lot of times when you are using these different credit cards versus debit cards, as far as for me, I go back to when you're doing your taxes. But if you're an independent contractor or self-employed, a lot of times you have to show your DTI has to be under a certain amount. Okay. Your DTI has to maintain, I tell people 30% or less for your debt to income ratio. Just meaning, say, if your average income, your net average income, net means what you actually bring home in hand, like in pocket, not what you gross, minus like tax deductions or insurance or just different liabilities coming out. You do have to have a balance in everything you do. I always tell a lot of my tax clients who come to me, kind of maintain your DTI like 30% or less. And then even when you're an independent contractor, when you're trying to secure real estate or trying to secure different loans, you automatically have to show 2 years tax returns. You have to show a good balance of your gross income versus what you're actually netting in pocket. You have to show justifiable expenses, which are going to be your deductions out. So a lot of times when you're balancing these credit cards and stuff, a lot of times I go through the actual statements with the client to kind of see what are things that we can write off, what are actually legal deductions. I know Mr. Bowman is good about maintaining that. I like to use a lot of people in the room. So people who are coming to me, when you're talking about these different things, the debit cards, credit cards, you just want to make sure that these are going to be beneficial to you. As far as like when you come to me, it's always like in a tax perspective. So I'm looking at, are these purchases valid? Are these going to be deductible? Are we going to be able to itemize this? Are we going to be able to maintain the money that you're actually bringing in? Is it going to keep your debt to income ratio low? So that's more so from my perspective.
Okay. So how to buy a home, car, whatever you want with credit. Buy that car, buy that home, buy that boat. Okay. So this is our, both of us are going to talk about that because when you purchase a house, again, they want to see W-2s your last year. If you have your W-2 employee primarily, if you're primarily a W-2 employee, then they want to see your W-2s. Unless you're making so much money in your business and you've been doing it for 2 years and you want to show that additional income, but it can't be, income that you wrote off, maybe where you're not lost. You want to show that profit. So if you've been showing 2 years of that, and Tammy will talk about that a little bit more, but she talked about earlier about buying a car in your business name. I have a friend of mine who's also a teacher, a colleague. And this teacher was talking to me last year about, we do a lot of conferences as engineering teachers, so we have a lot of time to talk to each other. She was like, Turo. I don't know if you all ever heard of that, but she wanted to buy an extra car to rent out on Turo. And I have another friend of mine that does it as well. She had like 2 extra cars. And she's doing very well renting her car out, kind of like a, like a Hertz, like a those rental car companies, but you're renting out your car on a daily basis or weekly basis. And so that car is being leveraged to pay the car notes and to provide for other things in the household or savings or investing or whatever the case may be. Because, those people that I'm talking about have really good credit, they can buy multiple cars and do that, because long as you show when you're getting a loan that you have income to support you being able to incur another expense, then you can definitely do that. So you're buying these cars and things like that. Now, of course, if you need a car for, to going to work, me being a teacher, of course, I just got another car. My car is primarily used for that, but I also use it for business if I have to travel or go look at property. So those would be expenses that I can deduct from my income. Buying a home, of course, that is, your home is, people call it, a lot of times you hear people, especially Robert Kiyosaki, who's one of my favorite people, Rich Dad, Poor Dad. If you all haven't read that or heard that, please go to YouTube and look up Rich Dad, Poor Dad. Well, buy that home. So you want to at least have some type of home that you own, even if you don't live in it, in my opinion. Even if you don't live in it. And that's kind of going back to the kids, because I always think of, dang, if I would have started earlier, I would be a multimillionaire. I know I would be. Because the knowledge that I have now, like I try to tell my students, and I'm glad I'm able to spend time with some of them after school and kind of impart this wisdom. Just think about it, instead of you having to pay Georgia Southern to stay in the dorm, somebody's paying you to stay in your townhome or your house that you own, and your child's name is on that. So you're not worried about, I got to pay this tuition and I'm room and board, because you got other people paying it for you. Let's imagine if we have a son that goes to Morehouse right now. Now, we should have done this, and maybe we still will. But let's say we find a good property down there by Morehouse, and I wish we would have got those properties 6-7 years ago. Yeah. But let's say we bought a house or a townhome or something comes up, and we could get it for $100,000 or $200,000, and Tyler could stay there. And he could, have his, and we had 2 other bedrooms that we could rent out. But those kids are paying $1,000 a month somewhere else. They can go on and pay us the $1,000 or Tyler the $1,000 a month, and that'll pay that mortgage down. And he can, even when he leaves Morehouse, he can still have that house. Then you have 3 people in those rooms paying him, and then he can go get another. If you want to stay in a penthouse on downtown Atlanta, he can do that, because he has other people paying for that asset. Or let's say you wanted to leave off the grid. You didn't want to, worry about living in the United States anymore. You just want to buy a boat and sail the world. I know people who sold their house. I know people, they're teachers. I'm not going to say no names. I know them. They sold their house. They make really good money. Both of them together probably make $200,000 because one of them is a director and one is like a teacher. But they probably make together $200,000. Teachers' income is public information, so it's not like I'm divulging anything. They sold their house. They got the equity at the top of the market, and they're living in the basement with their parents right now, but they got a boat and they travel when they want to. And if they wanted to retire tomorrow, they'll be okay. So this is the beauty of having good credit, getting the things early, leveraging, and then doing what you want to do. Tammy?
Exactly. Yep. And then, like I said, from my perspective, I want you to think dual purpose. When you're buying these cars, or like Shanika said, when you have a home, think about, okay, how can I use this car for my business? Erica, she has a HR consulting firm. She bought a new vehicle. Now, mileage is one of the biggest write-offs that you can possibly do. So if she wants to decrease some of her liabilities and drop her tax bracket down, to a lower tax bracket where she won't be taxed as much, then now this is where you utilize, like, hey, let me start keeping these gas receipts. Let me write off my mileage. Let me write off my gas expense. Gas is high. So now you're putting yourself in a position by having the good credit and better credit. Now, when you buy that vehicle or you buy that home, hey, you can write off the square footage of your home office. You can write off all your supplies. These are things that you can do where now you're able to take deductions that are going to benefit you at the end of the year. Now, because like I said, you can write off your boat, you can write off all these things. So now when you start tying them in to like, hey, a dual purpose, I have better credit. I'm leveraging my credit. And now I can utilize these items that I'm able to purchase with the better credit. But hey, at the end of the day, you're going to have so many deductions and you're going to be able to utilize everything that you're able to write off and stuff that you're dropping yourself down. You're decreasing your tax liabilities and you get those benefits of them.
Exactly. And that just goes to our last slide, which is side hustle, side hustle, side hustle. There's a book, and I'm a nerd, y'all. I'm a real nerd, and I embrace my nerddom, right? I tried to run away from it when I was younger, but in my 40s, I'm embracing my nerddom, okay? And I've been embracing it for like 10 or 12 years. My husband's like, yes. But there's a book called Multiple Streams of Income by Robert Allen. And there's been updates to that book. And I think he has a book called Multiple Streams of Internet Income. As I'm talking, you can look this up on your phone. Everybody, in my opinion, I have to put that in there, needs to have more than one stream. Okay. W-2 money is good money. Don't get it wrong. Don't let us sit there and tell you, it's better to be an entrepreneur. It's good, but it's some cons to it too. Because I did it full time. And I'll make $12,000 one month. The next month, I'm down to $1,000. Mm-hmm. And I got my overhead is $9,000 a month. That's not cool, right? So I'm talking from experience. I'm a W-2 employee for a reason. I do like that steady check. And I like being off 2 months out of the year. Yes, it's a struggle. It's not easy teaching kids, but I love it. And I'm not going to stop till God tell me to stop. At the same time, if they try to make me do something I don't want to do, I'm going to leave. And I have multiple things to fall back on. I have my real estate business, my travel business. I have a curriculum development company. Like, again, I told you I have 195 products and Teachers Pay Teachers. And I'm a life insurance agent. Horace Mann is, an insurance company that mainly that works with teachers, but with other people as well with life, health, and sickness insurance. I don't have to work for anybody else, right? I got 4 degrees, and that's not to brag. What I'm saying is I always put enough things in place where if I wanted to move, I could, right? And so that's what I tell people. Don't just be codependent, because I've seen it too many times where people are codependent on one source of income, right? So yours may be, maybe you have some properties that you're renting out. Maybe you have 2 or 3 properties that you're getting income from, but we see what happened with that. Lord knows I had 4 properties that I was managing at one point. And it was, for my own personal truth, it was a headache for me. One of the reasons why was because I let them know I was the owner. And the people that did take advantage of me, because I'm too nice, I'm gonna say that to be a landlord, I should have, farmed it out. There's a whole nother seminar. It's a whole nother seminar. But that was one that I was trying to do that angle. But of course, some may be that you get, some people, unfortunately, but fortunately, may get money from, like, let's say an annuity. Maybe somebody passed away and you might get money from, their retirement or something. It could be, it's so many different variables, right? So you don't have to be busting your butt working, because I don't work, 80 hours a week. It might seem like it because I have all those businesses, but a lot of my stuff is automated and I have systems in place. Like I said, with the money that I'll create something on Teachers Pay Teachers and I'll upload it and I'll forget about it. Sometimes I won't even, push it. Sometimes I'll post it on Facebook or Twitter. Sometimes I won't, and I still make money. But it wasn't overnight. I've been doing this for 10, 12, I don't even know, since 2012, 10 years. And before that, I was on eBay selling stuff. Lord knows I like to buy stuff. Tammy?
Well, I definitely think everybody should have a side hustle or some type of side business, because it allows you to write off different things and really just take advantage of I can't go emphasize enough of just decreasing your tax liabilities. But my main thing is I want people to know is really just what type of corporation to set up. And when you're setting up a business, you really want somebody who can explain the differences between why should you set up an LLC versus an S corp. what's the advantage of a sole proprietor versus an LLC versus a C Corp? Because it's different advantages to different types of businesses when you set them up. A lot of people don't know that S Corps, you aren't double taxed. So a lot of your bigger companies, when you're starting out and you're thinking about like, okay, what type of business do I want to set up? What industry am I going into? How much profit do I think I'm going to generate? That all those factors have to be looked at when you're determining what type of business to set up and how it could benefit you. S corps, you can actually pay yourself a distribution or a salary and not have to pay self-employment tax on it on when you actually file your personal taxes. So when you have, say you want to set up a parent company and you're thinking, well, I might have multiple businesses that I might want to fall underneath as subsidiaries down the road, when you're thinking about your multiple streams of income, hey, I'm going to set up this one big parent company and eventually I hope to have different other companies that I can attach them to it, then setting up an S corp will benefit you. You can pay yourself a salary. You don't have to actually show the income because S corps are actually just for informational purposes. When you file your taxes, when you file your 1120S, people don't realize you really are just giving the information to the Internal Revenue, but you are not actually filing it. A C corp is going to be more like your companies like Coca-Cola, your big company, AT&T. So when you're thinking about, hey, what kind of business can I set up on the side? The actual setup of the company is important too, because there's so many different benefits or advantages that you can take advantage of when you're actually setting them up. But I just think it's important. Me, I've been an entrepreneur, like you said. I love the fact that everybody has to know their niche. Me personally, I've had several businesses and I've been an entrepreneur for about 15 years now. So I don't have that additional income coming in steady from an actual W-2 job. So creating multiple streams of income is very important for me. I had a school and then I had my tax business, but my tax business paid for the school. It got the school up and running. So having those multiple streams of income is very important to me. And it helps me to basically generate and be able to pay all my major bills, my house, my car, raise my daughter. I was able to put her in different schools and stuff. So I think everybody should be thinking multiple streams, especially in this day and age, because anything can happen. Things change in a blink of an eye. And like she said, it's great to have that W-2 job as like your foundation, but you don't want that to be your only option. You want to be able to have different streams of income coming in just in case anything happens, because we know now jobs will fire you in a minute, or different things will happen, different things will come about where you have to just be able to kind of think quick on your feet and maneuver. And if you have those multiple streams of income already set up and in place and you're generating that money from themselves, then you have other options.
So this is 5:31, and we want to open it up for questions. I know I just answered the question. Adrena asked me to put the name of the books in the chat. I'm trying to see if y'all saw that. I just hit enter. I don't know why. Did y'all see it? Let me see if I can change and try to enter. Okay, there you should see it. Rich Dad, Poor Dad, and Multiple Streams of Income. I always recommend my teenagers, my kids that are about to graduate, to read those books. My sons, to read those books. And even if they can't read them, they have audio versions of those books. I use my car as a university. I listen to Audible. I listen to YouTube University, Skillshare, and LinkedIn Learning. People say, it's so funny because I tell this story and I'm very transparent. I'm an engineering teacher, but I'm not an engineer. In other words, I never sat for an engineer. I never worked as an engineer, but I'm certified in 12 different subjects. And I just went to classes to learn how to do certain things. And that's what I do. I kind of hack my way through learning about things and study under people. And I just put two and two together. And I think that's the way in the 21st century. That is what we need to do in order to survive. I don't know if I'm going to be replaced by robots in the next 10 years as a teacher, but if I am, I know how to program them. So what I'm trying to say is I learn so that I can do. I put myself in this position as an engineering teacher. It was this called me. It didn't call, I'm just saying that because I have to learn so many things. And Fabian is on the line. He is also a colleague of mine. We used to work together at Arabia. He's at Cedar Grove now. But we're in a position where literally we are learning for free. I say that we're getting paid to learn because we have to learn computer programming. We got to learn AutoCAD, computer aided design. We have to learn how to use different shop machines, computer numerical control, CNC, 3D printing. We got to understand the bandsaw, the drill press, this. We have to learn a lot of stuff. But you think about it, those are connected to different jobs. So if we want to go have a home repair business or a computer programming business or web design business, we can easily do a side hustle. But even if you're not teaching, you could go on LinkedIn Learning. You could go on Skillshare, or you could just leverage somebody like me or Tammy, and we can, a lot of things that we can teach you just from experience. So being around people that can mentor you, or putting yourself in a job is going to open it up where you can either learn for free or get paid to learn is going to be important. And then you take that information and you leverage that into another business. Tammy?
Yep, I definitely am in total agreement with you. Does anybody have any questions or anything they want to ask? You can unmute yourself and ask any additional questions if you want to ask some specific questions, or if you have a comment. But we really appreciate everybody tuning in. I know a lot of people took time out of their day today just to kind of tune in, and we hope that you got something out of the presentation and the sharing of the knowledge. And we hope to continue this, if not on a monthly basis, definitely a quarterly basis, really, like I said, just kind of coming together as a community of Black entrepreneurs, business owners, people, our kids, our family, our friends, and really just gaining more knowledge on how to position ourselves better. So, does anybody have any questions? This has been awesome. I'm definitely learned something.
Thank you, Adriana. Appreciate you. I did want to say something. I know I'm looking at the list of things that we're going to discuss. Above the line and below the line deductions, Schedule C's, and whatnot. Could you kind of expand on that a little bit?
Well, okay, I definitely will. Well, okay, so as far as Schedule C's, really these are just when you actually have let me see, this integrated experience conversation, very grateful. Okay, so itemized deductions. Well, hello, my daughter Ashley invited me, and I'm very glad she did. Okay, sorry guys. When we're talking about below the line deductions, itemized deductions, and Schedule C's, we're really talking about when you actually are set up and you maybe have an LLC or you have a sole proprietorship. And then now when you're coming to me at the end of the year and you have to file your taxes, that basically you have generated gross income as far as from your business, and you're sitting down with the actual accountant and we're talking about deductions. So now we're looking at, okay, certain type of deductions, they are considered non-refundable credits and like refundable credits. I didn't really want to go too much in detail. I thought it could be like a different session, because now we're talking about specific. A lot of people don't realize that it's a difference between non-refundable deductions and like refundable credits, which basically dictate how deductions are taken on your Schedule C. You file a Schedule C, like I said, when you have a side business or a side hustle and you come in, but it depends on how that business is set up. So that determines how we're going to itemize, which means kind of just pinpoint what deductions can we write off, how are they going to benefit you. Some deductions you don't receive full credit for, and some deductions you do, like charitable contributions, work expenses, your square footage of your office. You can write off your lunch expense. A lot of people don't realize you can write off your commuting miles, your W-2 jobs. It's different schedules that you can use, a Schedule A versus a Schedule C. And a lot of times when you're coming to me, these deductions, they make a difference. They have to be reported on different schedules. I know Mr. Bowman and Schnicker, they're teachers. They get to write off certain deductions on what is called a Schedule A, like people don't realize your commuting miles, your gas expense that you spend for your W-2 job, your lunch expense. If you're in certain industries, you get to write off other usages, like your dry cleaning, your clothes, your school expenses and stuff. So it's certain industries that you get to actually report when you actually file your personal income taxes, that you have to pay 15.3%, which is your self-employment tax. But when you are basically able to write off these additional deductions, whether they're non-refundable or refundable, it means that you're receiving a certain proportion back, like a percentage back. For example, like when you write off your gas expense, you might spend, say, $5,000 on gas for the entire year. You actually only receive about 2.5% of that back as an actual deduction towards you. So that's the difference in like a non-refundable versus refundable. Say you spend up to $1,200 for your charitable contributions. You actually get to write off 5% of that. So when we talk about kind of talk about going into your itemized deductions and what you can write off, it kind of gets a little technical. I thought that would be great for like another kind of tax portion, but I know a lot of times when my tax clients come to me in person, these are benefits that you get to take advantage of depending on how you set your company up, what industry is your company in. It's really just kind of going over what benefits will you have on your deductions in order to help you drive, because you're always ultimately trying to drop yourself down to a lower tax bracket just to decrease your liability. It's basically what you're always trying to do. So when we talk about itemized deductions, we're talking about, hey, if I'm filing married, filing jointly, the government is giving you a certain amount of standard deductions that they're automatically going to deduct from the bottom line of your income. Okay. So that means like, hey, we're giving you these standard deductions. We might write off $9,600, but when you come and you're able to take advantage of your Schedule C with that side business, now you might have 21,500 worth of deductions you could actually write off below the line. So really, it's just really showing you, it's not learning a new thing. It was really showing you, hey, now I'm dropping myself even down even further, where now you won't be penalized as much. So from a self-employment status, you're really just trying to decrease your self-employment tax. So you're thinking, hey, when I'm notating my deductions on my Schedule C, I want to have more than the standard deductions that the government is basically allowing me to have. When you have that side business and that side hustle, and you are able to, and you have a W-2 job too, now you are positioning yourself where you are able to take advantage of more deductions that you can itemize below the line. And it's basically just decreasing your liabilities to a point where you're not penalized. That's basically what it's doing.
So
And
Tammy,
so-
would it benefit people who are thinking about starting a side hustle or have one to do like a pre-tax planning session for that each year prior, each year that they start fiscal year? Would it benefit them? Because I know a lot of very successful people or rich people, they have tax planners. So they do tax planning and they're more proactive instead of reactive.
Right. Yeah.
So would that be like a consultation that they would do with you?
Yeah, well, this is the thing. My office is only open. I'm not open year round yet, but a lot of times people do set up consultations during my down season. But in the beginning of the year, when I actually am open and ready to kind of go, a lot of people do take time out to kind of come and sit down, because it really depends on the situation. A lot of times, it's really kind of explaining in detail, like if you're filing, how you're filing. It's a difference in filing head of household versus single versus married filing jointly. So I think a lot of times when people are coming in, you might have advantages if you're filing, say you're single and you come in and I basically can show you, hey, this is the way it'll benefit you in order to actually have a side business. because you're taxed differently when you file single versus head of household or married filing jointly. So when you're talking about being, just proactive instead of reactive, a lot of people don't even understand their status of how they're filing. Because like I said, when you file single, you're penalized at a higher rate. A lot of people don't even realize that income you only get back like 33.4% of whatever you have paid out in taxes. So now having a side business will benefit you tremendously versus say if you're head of household and you still have a side business, it's different ways on how you actually want to write it off. So, I don't know.
Also, like I know a lot of people may be afraid to have a side business or just a business in general because they might feel like, well, I barely got enough money now, but I don't know if some people realize that, you're not paying as much tax. You're using the money that you would have normally just paid in taxes. Some of that money can be allocated to the things that now are considered expenses for your business. So that's another thing, because normally when you start a business, the first 2 or 3 years, you're at a loss anyway.
Right. Most businesses, you basically are at a loss for the first 3 to 5 years. And to be honest, technically, it doesn't take a lot of capital to actually start up a business. It depends on the industry. It depends on, it's so many different businesses that you can start up with basically no reserve at all, just depending on the industry. So I think a lot of times people just have to sit down or get that knowledge with an expert on, hey, what industry can I go to where it's barely any minimum startup costs? Or you can tap into angel investors. You can tap into different type of investment options. There's a lot of different options where you can actually raise the money to start a business. I know I used to deal with angel investors who were people who used to come in and actually front the money for the initial business owner. So I mean, it's so many like the tax side, it's so intricate. Like I think it's great. I like one-on-one consultations when people really do want to take the time and kind of sit down, because taxes is different. Like I said, it depends on the scenario. It depends on how you're filing. It depends on what type of business you want to set up. There's so many different advantages to different types of setups. So you really have to look at everybody as an individual by individual case. Because I said a lot of times people don't realize that it's all based upon percentages, based upon how you're filing. And it depends on There's so many other factors that go into it. Tax bracket, like how much income are you really generating? It's certain parameters. When you make over a certain amount of money, you get more benefits. Certain incomes that fall between certain parameters, they get more. So it's so many different factors that go into it.
Mm-hmm. All right. Do we have any other questions or anything? I want to make sure we answered all the things we said we were going to tell you about. That's why I was kind of going more into detail of that. Well, I'm going to kind of wrap up. Like I said, the perspective that I come from is more so, I come from a family of educators and preachers, if you can't tell. And education is so valuable. And I wish that we had the time to really talk about this stuff in the public schools. Sometimes we do, but really not to go into detail. And so I think from a teacher's perspective, and I'm a high school teacher, so I do know a lot of kids are leaving high school and they're, it sounds good. They're going to college and, they're getting into debt to go to college, most of them, because a lot of kids, believe it or not, they don't apply for those scholarships like you think they are. A lot of people, especially in Georgia, if they know they got a 3.0 or higher, they get hope, but then they go move down the street, they're 20 minutes away from the house and they want to stay on campus, which I get it. But the conversation that I always have is, how are you going to pay for this? What's your plan when you get out? Because when you're out of the house for even 6 months, you really don't want to come back because you used to being free. So the whole thing is, this is something that maybe you all know a lot of this stuff, or maybe you experienced it as a youth and you went through school of hard knocks, but how long are you going to keep knocking on the school of hard knocks is the question.
Right on. Well, like I said, I want to thank everybody for coming out. We appreciate everybody for tuning in and taking time out their evening on this Sunday to really just, tap in. This is our first session that we're doing, and we hope to be able to share more sessions in the future, and definitely have Erica chime in. She actually works as an HR consultant, and she has some great knowledge as well about jobs, obtaining jobs, and how to come from that angle and stuff. So hopefully we're able to include her, or maybe hopefully her schedule opens up where she has time to be included, because I think these sessions are so informative. And we appreciate everybody coming out. Juan, my childhood friend, Mr. Bowman, Audrina, a lot of you all I text this morning, Don. And so we appreciate y'all, like I said, just listening and sharing knowledge. And we love hearing your perspective too. So definitely stay tuned, and we'll try to do more presentations. Thank you, Juan. And hopefully add more and more to these sessions as we go on, no matter if we do it on a monthly basis or quarterly basis. Hopefully you gain something from it, and then we can continue elevating and sharing knowledge with each other, and then just getting better as a community.
Thank you all. Again, we are here for the next 10 minutes. So as we said, we was going to end at 6 or 12 minutes. So if you had any questions when everybody else drops off, we will be here to answer those questions. Have a blessed day.
Thank y'all.
All right, thank you.
Oh, Adrina. Hey, Adrina.
Hi, Tammy.
Oh, this is Shanika.
Wait a minute, when I can't hear you, hold on. I got to put it back in my headset.
Okay. Let me take recording off again.
One.
Get it recording. Let's see. Is it still recording?
Why am I still recording?
I don't know. I'm trying to turn
It
it off.
is. It's still recording.